Market mashup. What do we have in store for tonight? We all know Bloomberg, right? Bloomberg is a news source out of the States. Come on in. Hey, Pierre. News source, and they just posted this article a couple of days ago. Who just beat San Fran in tech jobs? What city? Here's your hint. Toronto. Thank you. This is pretty cool, actually. This is for the year 2017. Toronto added, you can see the number up here, almost 29,000 new tech jobs. You can see along the bottom here, the Bay Area, Washington, New York, and Seattle. Add those up, and it doesn't even equal what Toronto just added. That's pretty impressive, right? Those are things that often aren't talked about in our world, but that is amazing that the tech industry sees that. So the question is why? Why are companies coming here and hiring Torontonians and everyone around the GTA? First, believe it or not, it's cheaper labor. Secondly, a well-educated workforce. We're smart people, right? Right? Why are you laughing? And would you believe this? Cheaper real estate in the GTA compared to some of those other cities. Yeah, perhaps. So in that article, they actually gave us an example. A 500 employee company requires 75,000 square feet of space, right? In the Bay Area, that would cost annually about $57 million to operate. In New York, and this surprised me actually, it's, I say only, but $36 million to operate. Guess what Toronto is? 30 million. These are American funds, by the way. That's almost half the cost if you were moving from the Bay Area to the Toronto area, right? I thought that was pretty cool. The next article, who saw this week? Thousands line up for zero down payment in subprime mortgages. This just happened, this was just posted this week on CNBC. It's happening again, right? It's happening again, but you know what? It's different this time. That's what the article's saying. I'm going to highlight some of the things in here. Borrowers can have low credit scores, but have to go through an education system this time around. About the program, and I love how it finishes here. And submit all necessary documents this time around, from income statements to phone bills. That's different from the last time, right? It's different this time. What else? They must, now this is where, that was kind of tongue-in-cheek beforehand, but this is actually pretty good. They must go through counseling to understand their monthly budget so they can afford, so they can afford the mortgage payment or understand that. Next we have, the loans are, this is a big one actually, 15 to 30 year fixed with interest rates below market values typically. Why is that so important? Because if you were here last month, or if you understand the US mortgage subprime, you remember that was an adjustable rate mortgage where the interest rate would not bump up, it would like skyrocket up, right? Over a few years. So that's actually a different way to look at it, but it's important that they understand that. It's important that we kind of know what's going on. And then finally, I kind of finish off with a little story or a quote here. One of the borrowers is confident she can make the low monthly payments, which is to say what? Maybe not so well. She didn't do so well the last time around. Anyways, it's starting to happen again, right? We'll just kind of keep our eye on what's going on. That was, 2008 is the big fall of it. That's 10 years ago. 10 years went by like that, right? So we'll see. Time is a great healer for some of those hurts, right? So we'll see what happens. See what happens. PwC, you've all heard of PricewaterhouseCoopers, right? Big research company and accounting company. Every year, they do a lot of reports. Every year, one of their reports this time of year is a real estate outlook for 2019 for Canada and the US. So I almost read the entire 115-page report today, but I pulled out some really interesting information, and let's see what they have to say about our real estate market and the US. And the first off, what they're going to tell us is tech is taking over. And for the realtors in here, especially at Keller Williams, we understand that, we embrace it, we love it. There's a lot of great things that tech allows us to do. In fact, I can pull out my phone and ask one of the apps that we have through Keller Williams, what's the market update for this postal code, and it'll tell me within seconds, right? It's pretty cool. But what I want to point out is, I got a picture of a phone here with like a GPS map on it, right? This is where tech is taking over, and we don't even know it. I got my phone here. I walk into a mall, and it's tracking me. It's tracking every step where I go, right? You ever wondered why the Apple store is always near an exit or right in the center of the mall? You ever wonder why stores are in specific spots in the mall? Of course, we know location is a big piece of real estate. Obviously, in malls or shopping centers, that is too. They are collecting the data that we walk around with right here to analyze and to create opportunities for themselves. Not just Apple, like Google's doing that. All the big stores are doing that. They have so much data, they don't know what to do with it right now, right? But data and tech is certainly taking over. And they know how long you're in a store for. They know when you leave. They know what store you're going to next, just by your shopping habits based on the GPS on your phone, right? And we'll talk a little bit more about malls and power centers and all that a little bit later in some of the slides. The other thing that I thought is pretty cool that is starting to become really relevant is different tools that we can use to show off our properties. So here's some VR glasses, right? And it hasn't kind of swept through the real estate industry yet, but there are some agents out there that will use VR tours. So you can put the glasses on and actually walk through a house that's listed online. That's pretty cool. And I thought to myself, well, tonight we're talking to real estate investors. How does that affect them? Well, maybe you have some higher end rentals you want to provide that service for. Or maybe you have like some vacation properties you want to provide that service for. And let your imagination go. I thought that was pretty cool. When I started thinking about the different ways we could use that. The biggest tech not disturber, that is the wrong word. I can't think of the word that I want. The biggest thing that's happening right now, and everyone's seen drones, right? Everyone knows drones. We use drones in almost all of our listings, and this is a huge tool, not just to sell real estate. I think it could be a huge tool if you own vacation properties. I haven't seen one cottage that's being rented on any VRBO site or anything like that use a drone tour. How cool would that be, right? I think that'd be amazing. I would certainly want to stay at that cottage as opposed to the one that isn't showing off the lakefront and everything like that. So that's where we kind of start thinking outside the box. Here's where it's making huge changes, not just in selling real estate, but in actually developing real estate. So see that guy in the background that would look to be flying the drone? What does he remind you of, or what is he? Construction worker. So one of the agents that works with us, Oliver Bello, his other job is a big project manager for a construction company that all they do is concrete. They build concrete buildings around the GTA. And when I say buildings, he is in charge of building the concrete for the hospitals, bridges, condo developments, malls. And how do they keep track of the progress of the projects is by using drones. So not only is it from the retail side, but the builders are using this in a huge way. And that's been one of the biggest added features from the tech side that we've seen in the last couple of years. So it's not just for the fun little listing videos that we, as a realtor, that I get to put together. No, it's for like much bigger stuff. And think about that as a real estate investor, how can you embrace that technology? How can you use it in your world? Perhaps you're sitting there and maybe it becomes a part of your presentation to a joint venture partner. Here's some of the buildings that we own, and here's the aerial shots from it. Let your imagination go with it. The other thing the report said is there's a lot of the big players that are rebalancing this year. Reassess, rebalance, and redevelop. So Target, for instance, let's use Target as an example. Target came to Canada, Target left Canada, right? So if we use Newmarket as an example at Upper Canada Mall, Target was in there and took up, I have it written here, 40,000 square feet of that mall. Then they vacated it. The Upper Canada Mall already had some decent anchor tenants. There's not many other anchor tenants in Canada that can take that space, right? Would you agree? If there's that space available? So you know what they did? And I don't know who thought of this. It's brilliant. For those of you that live in Newmarket, know this. Market and Company. If you want to know what that is, they basically said, we want to recreate the St. Lawrence market and put it here. And they did. And it's awesome. That's a rendering of what the inside is going to look like. But, there's meat purveyors, there's cheese, there's dessert, there's coffees of all sorts, there's everything. Now people are going to this mall that would never have walked into that mall before. What an amazing opportunity, right? So repurposing that for sure. We do it the same way. We look at a building and perhaps it only has 2 units and we know we can get that 3rd unit in there. If we make some of the smaller units, we're repurposing some of that space. They do it on a big scale as well. I don't know for a fact, but I can pretty much almost guarantee, I bet you they're making more money. The mall is making more money renting it out like this as opposed to one anchor tenant. More management on this side, but I'm sure they're making more money throughout this. Okay, some stats. Housing affordability. I know you can't really see this, but you can see the lines, right? You can see all the lines. Higher the line, the more, or I should say, the less affordable it is. So the last 2 bars over here is Vancouver and Toronto. The burgundy and moving to the yellow is from 2014 Q1 to the first quarter of 2018. What I wanted to point out here is in Toronto, 5 years ago almost, affordability was still a concern. Fast forward, it's increased every year. Even though everyone says our market has come down in pricing, the Toronto market is still very, very expensive to get into. Well, that's not information that we don't know. We already know that. Next I have is the forecast, so make sure I understand that. This is the forecast for net migration. How many people are coming to the Toronto area? So intercity net migration, that's the green. You can see it's on this side of the 0, which means what? People are leaving, right? So there are people leaving Toronto. Can you believe that? The purple, though, is the international immigration coming to Toronto. Far outweighs that, right? And by 2022, they're estimating about just over 400,000 more people coming to Toronto just in migration alone. That's only in 3.5 or so years, 4 years. And then you can see the other cities there. I know you can't see this. I'll blow it up in a second. Investment prospects. So this is where some of those big players, this is a whole line of types of investments that they're looking at. And it goes from warehousing right at the top to power centers at the bottom. So at the top 3 or 4, we've got warehousing, apartments. This one is going to be a big one, senior housing, mid-scale hotels and so forth. And then down at the very bottom, we have outlet centers, regional malls, and power centers. They're trying to get out of that, right? They're looking at these other opportunities. That's what the big players are looking at. Why is it important to know what the big players are doing? Because they kind of lead by example, right? We want to, if they're developing perhaps a new senior center, maybe we want to go and invest around that area as well. Different things like that. So we want to follow what they're doing for sure. Investment recommendations. So should you buy? Should you hold? Should you sell? So we'll zoom in a little bit. Of course, for the moderate income apartments, they're saying buy what you can. Hold obviously what you can, and they're saying don't sell. But if you're going to sell, obviously they come to us, right? Come let us buy them. Senior housing is at the top of that list. Affordable apartments, and then student housing is kind of in the middle there. Everything that they're kind of saying hang on to, it would be mid-scale hotels, student housing, suburban office, or the lower end hotels for sure. At the very bottom, they're saying sell the power centers. Sell the outlet centers. So remember my comment a few moments ago about repurposing or reusing some of that space? Could you see another investor or developer coming in at, for hopefully that bargain power center that they want to pick up because there's maybe more than one for sale. Maybe they're going to repurpose that land. So everyone's kind of looking at that type of stuff for sure. The next slide I have here, this was a survey done of what do you think of your local market. So you can see all the cities at the bottom here, what was surveyed: Vancouver, Ottawa, Montreal, Toronto, Quebec City, Winnipeg, Edmonton, Saskatoon, Calgary, and Halifax. Okay? I'm going to put up a bar here, then we're going to ask you a question. So the way we read this is from left to right. So each one of these is a city all the way across. And how they scored it was strength of the local economy, investor demands, capital availability, redevelopment opportunities, public or private investment, and local development community. The green is good. It's out of 5, 1 out of 5. The yellow or the red, not so good. So choosing some of these cities on the bottom here, what do you think, or what city feels they are perhaps at the bottom? Or where would you kind of peg, what cities would you peg at the bottom there? Yell some cities out. Saskatoon's at the bottom. That's random, okay. What else? Winnipeg? Is that the bottom? What else we got? Anything else? Okay. And then the opposite, what's at the top? Toronto. So remember, this is what local Torontonians say and feel about their city. Yeah? Ottawa's at the top? Okay. Vancouver, Toronto feel so good about their city, and more importantly, their real estate and the fundamentals all around it. Halifax, they feel they could be doing better. I don't know a lot about Halifax to comment on that. But Toronto, we feel pretty good for that. A couple more slides here. This is of no surprise because we've talked about our aging population here in the past. Here's what is most surprising though. So as the years go on, look at the bottom line here, 85 years and older. By 2035 to 2040, and we're talking in the thousands here, we're gonna have close to over, we'll have over 1 million people aged 85 and older. Good. That's good for you. That's a big, big number, which is to say, what, 95% of those people are gonna need some sort of senior type of housing, right? That's a lot of people. That doesn't exist today. Doesn't exist today. Okay, a couple of slides on the US market. US global investors, where had they come from over the last year, 2017, July to 2018? Canada is leading that market right now. Now, this is only for the last year, okay? So understand that. We as Canadians have invested about $27 billion into the US over the last year. Some of that perhaps or why China is not leading that is, as you know, it's been harder and harder for Chinese to move their money into other markets. So that's one of the factors in there. But I was surprised when I saw Canada leading that. Top 10 US cities to invest in. Now, they didn't give us a lot of detail on all of this or what their true criteria is, because we know we would do much more. What I'm saying is, I'm going to put up 10 cities. Don't just go and buy in these cities without doing any of your own due diligence, please. You think Arizona's on here? Yep. Okay, meaning Phoenix as a city? Okay. 10 would be Tampa, Charlotte, Denver, Boston, Austin. Anybody want to guess what perhaps some of the top 5 are?
St. Louis.
St. Louis. Buffalo. Miami. Dallas. Who said Dallas? Somewhere over here. Number 1, they're suggesting. New York, Raleigh, Orlando, Nashville. Now, somebody out there mentioned Buffalo. And for the sake of it being so close to us, it's rated 78. Now here's the weird thing. I'm reading the report, and I'm going through the cities, and I'm reading through it. It didn't go to 100. It didn't go to 90. It went to 79. And I forget what was 79. I should go look that up just for the heck of it, right? So Buffalo was not last on this list. There you go. Okay, Toronto, Hamilton, get ready for growth. We know this, right? We've been talking about this for a long time. This stat, and if you were reading my Facebook today, I put it on Facebook. This stat blew me away. Millennials are now of a certain age, and they want to do what? Buy. They are getting ready to buy because they're tired of living in perhaps, small rental units somewhere. Perhaps they're planning a family. They realize they need a house. What's that? Is that out loud? Yeah. They are looking to buy. Here's the stat that blew me away today. Over the next decade, there's approximately going to be 700,000 first-time home buyers with this buying group. That is huge. If you were here last month, we talked about how many new homes were built in the GTA, right? And how many new homes were specifically built last year? New homes. It doesn't even keep pace with this, which they're going to need 70,000. That doesn't even include all the immigrants and the immigration that's happening in Toronto and GTA area either. There's going to have to be something done with the supply, for sure. This is GTA including Hamilton. Yeah. Something's going to have to be done. So you might say to me, Gary, well, there's lots of homes for sale in the market. There is. There is a lot for sale in the market. At what price range, I will ask you. And there's a lot for sale, even in where we are in Markham and Stouffville, Richmond Hill, up here in Newmarket, at well over $1 million. Those aren't going to solve anybody's problems, right? They're looking for homes in the $500,000 range. So they're going to do that Greenbelt jump up to Barrie. They're going to go out to Hamilton, right? Maybe those are areas that you want to look at as well. Okay, a few more slides to wrap this up. Top 3 investments the big boys are buying in 2019. This is what they're looking at according to the report. The first one here is warehousing and fulfillment, right? That is what they're looking at, and here's why. But did you say Amazon? Is that what I heard? That's exactly it. Buyers are doing more of what? Buying online, right? The hardest piece for a company like Amazon is actually to deliver that product. So that last mile is important. So that's why we're starting to read stories and reports about Amazon and other companies doing big fulfillment centers like this locally here. And we're going to see more and more of that for sure. The next one is, and if you kind of caught it at the beginning of the presentation, the senior lifestyle housing. That is a big, big piece. And for the first time ever, actually, the age demographic. What? What are you saying?
She looks younger than me. Well, I was thinking.
That's my dad, by the way. For the first time ever, there are more people that are age 65 and older than that are younger than 15 years of age, right? That's a big population. And they're going to be looking for housing. So that's going to be a big piece of it going forward. The other one here is multifamily buildings. That'll never change, right? And part of that is because of that price point. So developers are still, that's why we see so many condos going up. That's why we see apartment buildings being built with rental units in it. And this could be anything, and when I was reading it, it could be anything from 4 units right on up to 200 or 300 units. So that's what they're looking at. Good? Good, good, good. Be in the know, that's what I always like to say is, don't take my word for it, like do the research yourself. I can certainly share with you where I got the report from, but certainly listen to people and read articles that you're going to get kind of that unbiased information from and learn from them and use this information, especially as Russell's going to be talking about joint ventures. Use this information perhaps to enlighten or educate some of your joint venture partners, right? This is this kind of stuff that sets you apart from others. So use it. Okay, before we get Russ up here, let's have a little networking hot minute is what I like to call it. We are in this room. I want you to introduce yourself tonight as a real estate investor. That's why you're here. And take that moment over the next minute to do that. That's great. Thank you.